Everybody talks about believing in yourself, paying yourself first. Well, one of the greatest examples of paying yourself first is in the stock market. Have you ever seen a company buy its own stock, basically reinvest in itself? That's what a lot of the people say to do for yourself. But this is a great example of how it happens in the stock market and how it actually increases overall stock prices. Welcome to Money Church. This is the Black Wealth Rebels. I'm Kamari Ellis. We got Jimmy Williams. We got Corey Camp. And we got a class for y'all today. So welcome, all my beautiful black geniuses. What's up, fellas? How y'all doing?
Hey, man, Sunday, hoodies on, you know what I mean? So we good, man. It's time to get into our Sunday talk. Every Sunday we come with a class for free. You know what I'm saying? Free class is what we do. It's for free. And I'm excited about this conversation, man. I think it's an interesting conversation. But how you gentlemen doing, man? Because y'all got on here, you know what I mean, already wanting to talk about the accountant too. I ain't seen it, so you know what I'm saying? I had to make sure we go live before y'all ruin it.
You only haven't seen it because you ain't want to see it, bro.
I'm gonna see it today just because I ain't trying to be left out. I mean, we could talk about it on Friday. You know what I'm saying? We're gonna talk about how ridiculous it is that, you know what I'm saying, But I know Kamari is that's like one of Kamari's heroes because he thinks it's about taxes somehow.
Oh, hold on. It is about taxes. What are you talking about?
I didn't see the part 2 yet. I saw part 1 several times, but I didn't see part 2 yet.
It's called The Accountant.
It doesn't mean it's about taxes, man.
So let's be clear. All accountants don't do taxes. This particular character does.
Yeah.
And he's very well suited at it.
But you like the fact that you got someone that does taxes out there like whooping ass. Like you think
it's my new hero, dog.
Yeah, it's like the accountant superhero, yo. Y'all got your own superhero.
Yeah, exactly.
They got accountant superheroes now.
y'all got your own superhero.
But what y'all don't realize, like my whole black tax squad, we was like, oh, we gotta all see this so we can talk about it.
Yo, when y'all go to conferences, there's like posters to blow up on the wall and all that, like.
Absolutely. Absolutely. What are we talking about? Hold on. Let me show you something, man. Come on, man. Y'all playing.
Everybody got the blick in the tax bag and whatever, man. Y'all be wilding, bro.
Man, listen. Y'all here playing, man. Come on, man. Y'all here playing. Listen back. I got this shotty. I got the scoop with the shotty. All right, listen, Sunday. This is Sunday. All right, we got our praises and hallelujahs.
Yeah, this is not Friday. Let's get it together.
Yeah, this ain't Friday. We can cut up real quick. I know this ain't Friday, but Shelby's here. All right, what up, Shelby?
Shelby, what's good?
What up, man?
What's good?
Shelby's here slandering me already. Before y'all start preaching, Kamari, I need you to have your hoodie on going forward. Yes, sir.
It's a Sunday ritual, man.
Not a problem. Actually, I never partook in ritual in the sacrament. And Miss Mary, happy Sunday.
Grand Rising.
And I got you on a honey, so I didn't forget.
Okay. All right, but listen though. If you're not a member of the village, please make sure to join the village by going to blackwealthrebels.com. The village is where we spend most of our time these days. Shout out to everybody in Bodyhood University, which still exists on Facebook, but we barely spend any time there because we're dedicating everything to the village. So if you are there watching this, join the village by going to blackwealthrebels.com. There is a free tier. That's where all of our education, all of our content, everything will go there. I'm even gonna start putting some of my social posts up there, some of my memes. You know what I'm saying? I'm trying to bring the memes back. Kamari refused to release them and send them a whole folder.
I digress. Making memes great again.
Make memes great again, but I digress.
I need Jimmy to stop lying again because I have put up the memes and Jimmy's actually pretty good on some days. I'm better on some days, but he might have me.
Miss Phoenix with the super chat. Super chat.
You got a super chat already? Whoa. Thank you.
Yeah, listen, man. Tithing. We tithing this good morning. It's good. This good morning is tithing.
Good morning from Toledo, Ohio. Shout out to Toledo. Thank you, Mrs. Phoenix. Appreciate you.
Also, I have a question too, right? So we already have next week's schedule, but the question I want to ask you, gentlemen, and even people in the chat, should we even have a show next week? Because I believe, if I'm not mistaken, next week is Mother's Day. So I'm not sure whether, we should just, I just want to put that out there because I just thought about that. Because today we're going to do about stock buybacks. Next week we're going to do about sector rotation. But next week is Mother's Day. So, what you
I
guys think?
always love my mama. I'm supposed to be taking my mother and my aunts out. So yeah, that might be a problem.
Yeah, and I got to spend some time with my aunt, you know what I'm saying? Like all the mothers in my family. Like, so it's like, I was thinking about that as I was looking at the dates, but we'll figure that out. But today,
Good call.
Yeah, today. And
if anything, maybe we don't do it in the morning. Maybe we'll do an afternoon service. Maybe.
Afternoon service.
We'll figure it out. I
like the way you said the afternoon service. But listen, y'all, and always happy early Mother's Day to the mothers that are watching live with us. You know what I'm saying? We love and appreciate y'all. And I thank you, Miss Phoenix. Yeah, we gotta make sure we show the fathers love too. On Father's Day, we also gonna take that day off just to keep it fair.
What up, Terry? What up, Terry?
Terry, how are you? Good morning. Thank you for joining us. Hey,
AKW Beats, what up?
Good morning. All right, so listen, we try to have Sundays really about a little bit of education and have great conversations about the stock market. For those who are not familiar with us and maybe your first time tuning in, we are the Black Wealth Rebels. That's my brother Kamari Ellis, my brother Corey. I am the talent. My name is Jimmy Williams.
All the slander.
Seriously though, Sunday is our class where we try to talk about something involving the stock market. Wednesday we talk about personal finance overall. Friday it goes off the rails and we talk about any and everything related to culture and finance. And then we have other shows that pop out throughout the week. A lot of shows are specifically for our audience within the village. So go to blackwealthrebels.com to join the village. But like I said, today is Sunday. So we're going to talk about something involving the stock market. You ready to get into it, good brothers?
Yes, sir. Let's let it rip.
All right, say less.
Let's go.
Say less, man. We about to have this conversation, man. So today, we want to talk about stock buybacks, right? And I know this is something that's a little bit controversial to some. To some people, they don't even know what it is, nor do they care. But I think it's important to have the conversation. So let's get into it. Hold on a second. Let me set up, my little notes over here to make sure I got everything. So understanding stock buybacks. And by the way, if you are in the village, this will be cut out separately so you can just, access the PowerPoint from this morning. So again, blackwealthrebels.com. But today we're going to talk about stock buybacks. So understanding stock buybacks, and they become a key strategy for companies to return value to shareholders. Kamari talked about that earlier. He used the analogy of investing in yourself. There's a lot of great analogies we could use for stock buybacks. That's one of them. But in this presentation, we're going to explore how they work, what are the advantages over dividends, and when companies choose each option. Now, a lot of people love dividends, and we've gotten to a lot of debates on this show and other shows about people who are strictly dividend investors. This is another way to return value to shareholders without just cutting them a check directly. Kamari can really speak to this because one of the reasons people don't like to have dividends as a way to gain more value from their equity is because it causes a tax issue sometimes, especially if you're talking about at scale, right? And I also want to start this conversation with something that I've said every Sunday since we've been doing these Sunday classes. When you buy stock, you are buying equity. You are buying ownership in a corporation. And it's important to point that out every Sunday. And I'm going to continuously point that out every Sunday because when you think about the stock market, I want you to always have that in the back of your mind. You're talking about ownership of a company. So now, if you have a company and a company provides a product or a service that then creates revenue, a lot of times that company will have excess cash that they have to deal with or cash that they have to manage. It's management's decision how to run the company. So when you invest in that company, what you're doing is you're trusting management to be a good steward of your capital. So when management decides that, hey, we're going to pay it back to the shareholders, that's called a dividend. Or when they decide, let's take this excess capital and buy some of our stock off of the market, then we will increase the value of the stock that's remaining. That's also a decision by management, but you have to figure out what works best for you. So a lot of people understand what a dividend is because people like getting checks, but let's get into what a stock buyback is. So a stock buyback is literally when a company purchases shares. The company buys its own shares from the open market using cash reserves, right? Those shares are then retired. So they take those shares off of the market, which means there are a smaller number of shares and people that own equity in that company. So they're typically taken out of circulation permanently, right? So permanently those shares are removed because they're bought back by the company. So what this does is creates ownership concentration. The remaining shareholders now own a larger percentage of the company. So the company was diluted in a certain way originally, but when the company buys back that stock, now there's a bigger concentration in ownership of said company. So I want to give you guys a good analogy. So Kamari gave the analogy of investing in yourself. Me and Kamari like to, and Corey like to go out and have great ribeyes every once in the blue. And we do have our dream of having the Black Wealth Rebel Steakhouse. That's in the future though. But so let's talk about this, right? So you say you have a beautiful ribeye, right? Hey, Corey, you got to peep the graphics and whatnot, right? So this is the analogy of a stock buyback, right? You got a beautiful piece of steak here.
You're making me hungry, man. I need some steak and eggs. And
as a side note, for those that get your steak well done, there's something wrong with you. But I digress. But as you can see, there are a number of plates behind the steak. So what that represents is that this steak will then have a certain value to everyone who has a plate, right? Because if we're splitting this equally, this has a certain value. We're getting a certain piece of said steak, right? Now, let's say what happens when you remove a stack of those plates, right? Now you're getting a bigger portion to the remaining plates, right? So now it has a different value because you're getting more steak because there's less people sharing that steak. Boom, now you're moving another one. What happens? The value increases, right? And I think that what's interesting about this analogy here is, and it's the same way in the real world when we're talking about a business, the actual business itself didn't change, right? It's just what it meant to those that are getting a piece of it. The business is still the same size. It's just that there's less people sharing said business, right? So that is kind of how a buyback works. What we're doing is we're removing plates off of the table. So this is the way to think about it for those who still don't understand what I'm saying. You remove plates off the table. So now there's like 4 plates there. This, it's more grub for those that remain. And by the way, I just want to, make sure I share that because I was working on that analogy this morning. So I digress. So let's talk about buybacks versus dividends and why companies prefer buybacks. And the reason that this is an important conversation is because there are a lot of criticism of buybacks, and it comes from a lot of dividend investors, and there's other criticisms as well that I'll talk about. So buybacks provide more flexibility. They're one-time events. Companies can adjust timing based on cash flow. Dividends create ongoing commitments. Why is that important? If you start to pay out a dividend, a lot of times people want you to increase that dividend and be working on increasing that dividend. But let's just say you have a bump in the road where, business has its ebbs and flows. You don't want to have to be responsible for increasing a dividend in a market where you shouldn't be increasing your dividend. And believe you me, I have seen companies do this. I've seen companies take on debt to fulfill dividend commitments. But what is that doing to the overall business? Again, when you think about this from the standpoint of running a business, you shouldn't be paying a dividend sometimes if you don't have the capital to pay a dividend. But you get caught in this little rut where now I've started a dividend, I've increased it a couple of years, business may slow down, but I can't not pay this dividend. Because, Kamari, quick question. What happens if you have a dividend you've been paying and you stop paying a dividend? What happens to the stock?
The stock will fall. I mean, we've seen that. We've seen that a lot during COVID. Ford had a great dividend. I talked about that a lot. They paused their dividend for a while, for a couple of years.
Disney stopped theirs.
Yes, Disney stopped theirs. A lot of them stopped theirs. I mean, but that also speaks to the vision, guidance, and management of the overall board, because there is flexibility in a dividend. You can stop. Problem is, the markets don't like it. The analysts don't like it. The investors don't like it. So there will be a cost.
Yes,
it may cost you a little bit.
So once you decide to go on dividend, there can be a cost, right? Because the market is very emotional. So if you're paying a dividend, now you're not paying a dividend, everybody's wondering like, yo, what's going on? Why they stop their dividend, right? And sometimes it could be too emotional. But the thing about a buyback is, at this point, I'll say, and what I'll say about that is I see this changing a little bit as well, because Apple has consistently bought back their dividend. In fact, over the last decade, there's been over $1 trillion, a trillion with a T, spent on stock buybacks, right? And Apple has kind of like led the helm in terms of the amount of buybacks.
Yep, $659 billion since 2012.
Yeah, so people are now expecting Apple to do buybacks. So I think that kind of will change. But as of right now, a lot of people don't look forward to a stock buyback the way they look forward to a dividend, right? And it's important to understand that both can provide value. And the other part, this middle part on the slide here, I bought for my brother the accountant too, the black version. Shareholders pay taxes. Look, watch Kamari start lighting up. That's the word tax. Shareholders pay taxes on dividends immediately. With buybacks, taxes are deferred until shares are sold. Warren Buffett, and shout out to Warren Buffett, who I watched speak yesterday. He often talks about the idea of stopping their dividend. Berkshire paid a dividend like for a short period of time, and he stopped it. And he said it's not tax efficient because he has a lot of shareholders who were with him since the beginning, and it was like killing him. That the money is better spent, and what they do stock buybacks, or they reinvest that capital. So shareholders pay taxes on dividends immediately. With buybacks, taxes are deferred until the shares are sold. So with that being said, you won't get that tax bill, but you'll still get the value of that capital being put to use for you to create value as a shareholder, but you won't have to pay taxes. Also, what happens is EPS improvement. We have a whole class on EPS, founder of the Village, blackwealthrebels.com, but earnings per share. So when you have fewer outstanding shares, mathematically, it increases the earnings per share. This generally boosts the stock price. But here's the other part. Here's where the criticism comes into play, is the last part of that that little piece right there. A lot of people say that stock buybacks are kind of like, a way for management to increase their stock options, because a lot of executive compensation is based upon literally the stock price. So sometimes when you do a dividend, it would actually lower the stock because that money is coming out of the company. When you do a buyback, it kind of has the opposite effect. So people believe that companies are choosing to do stock buybacks so executives can hit those targets and get crazy options. That's up for debate. There's a lot of
wait, what's there to debate?
Well, because there could be a situation where I am helping my compensation, but is it also what's best for the company long term, right? Both
things can be true.
But that's the point. That's the point. Two things can be true. But some people are saying that it's not what's best for the company. You're only doing this to increase your compensation. And that's where the debate lies. There's also a debate, and there's some data to back this up, that companies are doing less R&D. And there's also being less acquisition of other companies with the excess capital because they would rather than, to your point, invest in themselves. But I've also heard, going back to Warren Buffett again, like sometimes he said he'll look around the market and he doesn't see any great deals. The best deal he sees is buying his own company, right? So there's that argument. There's also like a lack of growth that's happening in corporations based upon if you put it on a chart and look at the abundance of stock buybacks versus the growth of jobs in corporate America, there's it's a heavy correlation there. So I say that to say there are some criticisms of stock buybacks, but it all depends upon your perspective and where you sit when you critique whether a stock buyback is something that's a positive and or a negative. So, but to your point, Kamari, two things can be true, right?
Or three.
Or three. A lot of things can be true at the same time. But the fact of the matter is, this is a strategy that's used. How does this help you as an investor or even a trader, right? Because if you're a trader, for one, let's go to the trader first. If you're a trader and you understand that this company does not pay dividends, so you won't be able to take advantage of that in terms of your swing trades or your leaps or what have you, that's one thing. The other thing is to understand that this company is focused on growing the stock price. That can also help you. If you see a company that's consistently doing buybacks, who is interested in boosting their price, that can help you as a trader. As an investor as well, more in Kamari's wheelhouse. But if taxes are part of your planning and how you navigate your money, and I know Kamari's going to say taxes should always be a part of your planning.
Always.
Right? You have to figure out what's more efficient for you in your situation. Now, there's times when dividends can be more important to you. But in your growth phase, I think it's very debatable. I've come from someone who I was a heavy dividend guy until I start running models and looking at it like, and I know this is going to sound very controversial, but in my specific situation, dividends just don't make sense, right? I'd rather have the growth. And that has to be something that you have to do for yourself. I'm not trying to give any investment advice. In fact, anything we say here is for educational, informational purposes only. Nothing we say is investment advice, it's for educational, entertainment purposes only, right? But for me personally, the growth of the portfolio was more important than receiving the dividends. And also, one of the things I learned from studying buybacks, because I think buybacks is something interesting to study when you see companies, how they do it, why they do it, is it actually changed my perspective on real estate. So everyone knows that my background is in real estate. But learning and getting better and learning the stock market over the last several decades has made me better as a real estate investor because there's so much correlation there as well. And when I look at buybacks, Sometimes I will be sitting on capital from my real estate investments, and I'm like, all right, every real estate investor wants to go buy the next building, right? But what happens when you can't find a deal that meets your numbers? What I started realizing is I can take something from the stock market. I can pay down the debt on the buildings that I currently have. That's my version in real estate of a stock buyback. Buy more of my company back.
Let me add this. Another version of a stock buyback in real estate is to do improvements and invest in the property you already have, which a lot of us don't do. And it's actually a detriment because some of us are really cheap when it comes to our real estate. And what I mean by cheap is we don't look at it like you're stewarding a property, you're stewarding your tenants that are there, making sure they always have the best possible product at the time. And I know that's very subjective, but I mean, I see some people that don't do nothing.
Yeah, I agree with you. And I think that's an excellent point. And that also sounds like someone who just spent a couple dollars on the furnace, but you know what?
It's funny, right? I've always been in real estate through my father, vicariously, well, not even vicariously. Like he always had me doing something.
Yes.
And I feel like I probably I had a bigger appreciation for doing maintenance ongoing in advance, proactively than he did. But he did do that, and I'm sure I got it from him.
Listen, it's funny, right? Because we're talking about buybacks, but this is all relevant because again, you can use this strategy as a real estate person, to, like Kamari said, to improve your building, to pay down the debt, right? Because when you have debt on a property, basically the bank's your partner, right? So that same analogy of the ribeye, right? I'm cutting small pieces. I'm taking plates away from the bank and putting the plates on my side is what I'm doing. And if I can't find a deal that makes sense, so one of the issues that real estate investors get into a lot of times is they're doing deals because they just want to do deals. They want to do deals for the sake of doing deals.
Well, you know what I say about that, right?
Listen, what do you say about that?
I say real estate investors, a lot of them, not all of them, their real estate deals are like crack. They're addicted to it. They always got to do a deal. And I'm like, yo, what would happen if you just sat still for a year, stack cash, and then go back to the market and do some things? It might make a world of difference.
You become addicted like the fiends you were accustomed to serving.
Yeah.
I just want to say a Jay-Z bar right there. But anyway, but the fact is this though, right? So I've been there. And the reason I can speak to that is because I've done that before. I've been down there. You know what I mean? I did that. So hopefully you won't have to go through that. So, but here's the thing though, to your point, just take a little bit of time. And that can be the same thing for a stock as well, right? Sometimes people trade and they invest because they just feel like they have to, instead of stacking cash and waiting for an opportunity. Sometimes it's about the opportunity. But this is why we believe DCA is the cheat code, because then you don't have to time things.
I think we just saw a wonderful example of that with Scaramucci, Anthony Scaramucci, where he invested $1,200 into his son's stock account, buying $1,200 worth of Microsoft. Forgot about it. It's now worth like $288,000.
Yeah, $288K. Yep.
Like, how wild is that?
He bought his stock. For those who don't know what we're talking about, Anthony Scaramucci talked about how he bought his son's stock in 1992 in Microsoft. It was $1,200, and literally lost it because it was through one of those things where the company he bought it with got bought by another company, and he's been trying to track it down. And it took a long period of time because they forgot about it, stopped looking it up, and they finally figured out where it was. But at this point, because they didn't have access to it, it's grown to be $288,000, right? So that's the thing. Sometimes doing nothing is the best decision you can make. But a buyback, a lot of times, getting back to the lesson, a buyback can be applied in a lot of ways, whether we're talking about real estate, right? Or let's say you run your own small business. What does a buyback look like, Kamari, if someone's running their own small business, right? As opposed to sometimes expanding that business to buy another location or whatever. How does a stock buyback look like, in your opinion, and something like that?
Again, invested in your business, whether it's investing in the infrastructure. If you have employees, maybe giving them a raise. And you will see that in the stock market. And I want to come back to that in a minute, but you can do all kinds of things, increasing your IT infrastructure, increasing or bettering your ads and your marketing. Many people don't realize some of the biggest things in business, if you're a business owner, is marketing. Books and marketing are your two biggest things where you'll get the biggest ROI. You need the marketing, keep the money coming in, You need your books together to make sure you're keeping the money that's coming in and using it efficiently.
Yep. All right, so let's keep it moving, though. I know a lot of people say, Jimmy, all you do is you poop on dividends. And I'll talk about my personal situation, but dividends sometimes can be a good thing, and it could be better for you, depending on.
But here's the thing with that, right? Personal finance is personal.
Absolutely.
That's all I got.
Absolutely. No, I just want to add to this, though. So when dividends make more sense, right? Let's talk about this real quick. Apple, who does pay a small dividend, they still favor large buybacks. Their 2023, they spent over $90 billion in buybacks, right? And also understand that stable companies tend to offer higher payouts when it comes to dividends, right? Utility companies are companies that pay, a substantial dividend. Those are older companies, not tech companies. They're more mature. But here's what I want to talk about. A lot of times retirees need and want dividends. You know what I mean? So if you're a retiree, you don't care about buybacks and growing your portfolio a long time. You might need that income to survive. So dividend remains preferred for income-focused investors in stable industries with limited growth opportunities, like utilities and telecom. So utilities are only going to grow by so much, right? So they're more focused on giving the value back to the shareholders in forms of a dividend. And if you are someone that's retired, again, that dividend may be important to you. I know a lot of people have the dream of retiring on dividends, right? I see it all the time on my timeline. I want to get X amount of dividends so I can stop working. That's a whole other conversation. I think we can save for a different show. The idea of everybody wants to stop working, but I'm gonna save my thoughts on that.
I don't.
You don't what?
Want to stop working? It might change how I work, but I don't want to stop working. I'm going to sit around.
That's you, right? But most people,
Yeah, I know.
Yeah. So anyway,
they want to sit around and scratch their ass.
Yeah, they want to live until. Yeah, you're a funny dude. Anyway, man. So the point is, dividends sometimes can make more sense depending upon you. But to Kamari's point, personal finance is personal. So you really have to think about what makes more sense for you. Are you about growing that portfolio to as big as humanly possible and avoiding those tax problems that you can have in the interim? Or are you retired and like, I need this to survive. I got to pay my bills. I need to put food on my family. So these are things you have to think about when it comes to you buying a company that is more interested in buybacks versus a high dividend company like a utility company or a REIT, right? So dividend versus stock buybacks is a side-by-side comparison real fast. Again, this is everything we've already talked about. Just wanted to put it like in a slide like this so you can, just take a quick look at it. And by the way, this, PowerPoint will be in the village, which will be blackwealthrebels.com. For those that are in the village, you'll get access to this, just to the PowerPoint part. So cash payment versus stock repurchase. Their preferences whether you're an income investor, something like retiree versus a growth value investor. The tax treatment, Kamari's favorite part, tax is income, tax only on gains, capital gains. One is less flexible, one is more flexible. One has an effect on EPS and one boosts EPS, or no effect on EPS, the other one boosts EPS. The signal to the market. So if I'm paying a high dividend, I'm saying that I'm a stable and mature company, right? So the signal to the market on a buyback is what? I'm undervalued. I'm so undervalued that I'm buying myself back. So in the industries, you'll find this common: utilities, telecoms, but on the other side, tech, financials, and buy and hold firms. So that's a little bit of the difference just in a chart between dividends versus buybacks, right? So that is the difference between dividends and buybacks. And hopefully you guys can see why buybacks can be valuable and why it's not a bad thing. Because I know a lot of people see that they don't pay dividends, they only do buybacks. I don't want to mess with that company. But it can be a positive thing. Also, you can see how buybacks can be used not just on the stock market, but in your own personal business. I don't care if you sell candles or whatever it is. The mentality of the stock buyback is something that you can apply there. For all my real estate folks, I've already started applying the idea of a buyback to the real estate space in multiple ways, improving properties like Kamari said, or getting more of it back from my investors. And by my investors, I mean my lenders, right? And it's funny, I got a text message from a tenant this week that kind of made my week because, I always complain about tenants and contractors, but she was just like, thank you for being so responsive. You're always responsive when something's wrong. And I was like, I felt a little good, So anyway, I say all that to say,
that's the way it's supposed to be. Don't be a slumlord. You're not.
No, listen, because here's the thing, right? There's some days where I just be getting tired because I've been in this game for years. It's made me an animal. But so But there's some days I'm like, I want to get out of the real estate game. But then there's other days when you get a message like that, or you see an effect you can have in terms of giving someone a house. And I've had people like thank me and literally come to tears because they were looking for a house, right? And it's like, I can't leave that alone. That's crack too. The idea of helping someone else is another thing that you can become addicted to, is being of service. But I digress. But I'm saying you can see how buybacks can make sense in multiple spaces. So the whole point of this presentation this morning is don't sleep on buybacks. That's what I should have called it. Don't sleep on buybacks. They can be very valuable. But I do want to open the floor for questions. So,
Well, we got a couple. Nicole here. What's up, Nicole? She's got a question. Good morning, Rebel. Since Warren Buffett is really retiring, do you think the market will drop temporarily? I know Miss Maui kind of asked the same question.
That's an excellent question, right? Because I was thinking about that when because I watched him speak yesterday. I was thinking about that, and I think he's taking a step back from the day to day of being the CEO, but he's still going to be a chairman. He's still going to be active, just not as active in terms of the day to day, goings on. I was wondering about that for Berkshire specifically, but your point is excellent. That could affect the market overall. And to be honest, I don't have an answer for that. I just don't know.
I do.
I always thought about how the market would respond when he passed away, because I thought he would pass away before he retired. Because and there's no, that's not a shot. The man is in his 90s. You know what I'm saying? Like, he's in his 90s. So, one day he ain't gonna wake up because none of us get out of here. So I often wondered how the market would respond to him passing away. The idea of retirement, I actually never thought about that. I never put any serious thought.
I think the market will pull back when he dies. Even if the market has a slight pullback now, will be a short blip, because like Jimmy said, he's still there. He's still very much in control. He's giving up day to day.
I mean, I think it's also another piece of, I don't want to get a man a Blumpkin. I think, he's an excellent study, but I'm not a sickle fan like some people that just go by every word he says. But at the same time, I do think there's a little bit of genius in this too, because how many people at this level actually have a succession plan, right? I think that's another gem that he's leaving on his way out. It's like, yo, I got the whole plan lined up for what happens to again, we talk about the idea of stewardship, which probably could be his own Wednesday show. The idea of stewardship and how he's navigating this, this entity known as Berkshire by having a succession plan. So I think there's value in that. So to me, I'm like, maybe it shouldn't drop, because he's showing that he's already ahead of the curve in terms of what should happen upon him not being here any longer. He's already in control of it. So, but it's an excellent question, though. Thank you for that.
It is succession planning. I would say he's a little late, but he has been doing succession planning in little increments over time.
Yeah.
But, he's actually ahead of the curve in terms of living longevity. So he'd be died.
But how many of us actually do that, right? Even in our own individual lives, right? So we're not running $1 billion entity, but we are running our households, right? Some of us have investments in terms of our portfolios, whether that be in real estate or be in the stock market. How many of us are doing the succession plan? How many of us are putting our stuff in writing that this goes to who, and I want this part of my business to? How many of us are doing that? And if you're not doing that, start doing it after this conversation.
I hope so.
It's never too late.
Listen, the estate planning webinar we did, the estate planning event we did in March will be available soon. We talk about what Jimmy just mentioned a lot. Yeah. So just stay tuned for that. For that.
Yes.
What's up, Emeka? How are you?
How are you, Emeka?
Going to be 95 in August. Right.
Yeah, he's up there. All right, so Mecca says, Jimmy, do you also have some multifamily under management? Your knowledge base conveys a very proficient landlord manager of real estate. Thank you for that comment. And to answer the question, currently, no. In the past, I've had a little bit about my real estate career. I'm not going to blow V8 too much because I want Kamari cussing me out. But so I've been in the real estate business since the late 90s. And yes, I'm old and washed, but I also started very young too. I started as a teenager. I've owned everything from commercial property to development land to, multifamily property, apartment buildings. I've pretty much owned every sort of asset class there is, with the exception of I would say skyscrapers or any sort of entertainment type thing, like a stadium. I haven't owned any of that.
Did you have any light commercial or light industrial?
I had commercial. Listen, I had Wells Fargo as a tenant one time. We could talk about that story later. I had
We need to talk about that.
Yeah,
Okay.
that could be his own show. But here's what I'll tell you about the commercial side. I got into the commercial side on the investment side. This is pre 2008 when you can go borrow $1 million just because you had a pulse. But I say that to say this though. When I got into the commercial side, I hated it, right? And I hated it because I just didn't feel comfortable there. It's a whole different business. Now, real estate is real estate. And some people will tell you it's all the same. It's not. And this is my specific experience. This is a live life experience. The difference between using triple net leases and also what's required of your corporate tenant versus dealing with someone on the residential side. In multifamily, not that it was an issue. What I didn't like about multifamily is specifically if you're dealing with 1 and 2 bedroom apartments, you're dealing with the more transient customer base. So a multifamily, I didn't like the amount of turnover I had. So I would put it, because think about it, who's living in a 1 bedroom apartment? You're not getting a family living in a 1 bedroom apartment. You're not getting a huge family living in a 2 bedroom apartment. So my turnover will be, every 2 years, every year, every 3 years. But
not just turnover, right? You also have to deal with a different kind of mindset when you deal with the type of tenant.
Yes, okay. Especially when I had 1 bedroom apartments, I would have to deal with sometimes students, younger folks, unless you get lucky and get someone that's a retiree looking to downscale. So I say that to say my bread and butter are single family residential homes. Now on the internet, you'll see people talk against them. I don't want to do that. You can't scale that way, blah, blah, blah. And that's okay. That could be their perspective. Me personally, I love a great SFR. Single family residential. And the reason that works for me is because it's something that Corey talks about all the time, which is your lifestyle design, right? In my lifestyle design, I like things to be stable. I have tenants that have been in their properties for over 20 years. I have other tenants that have been in their property over 10 years because their families, they look at it as being their property, right? You can't tell them that it's not their property, even though they pay me every month, right? And that's okay with me, right? So I have a great relationship with those tenants and I understand how that asset class works. So when there's something wrong with the plumbing, I know how to attack that. Something wrong with the electricity, I know how to attack that. It's just become my bread and butter. And I believe in keeping things simple and just hyper focusing on the thing you're good at. I found myself to be better at small single family residential properties. So that's what I buy. I don't want to be all over the place.
I would have thought you liked the triple net lease because it's sweet, except for the beginning.
It can be, but also the build outs. And
that's what's at the beginning, right?
Yeah, and that's the part I didn't like. And the other part about it is with single family residential and being completely transparent. It's another piece that I figured out over time. They're the most liquid, right? Because if I have an apartment building or a multifamily property and I put it on the market for sale, I'm going to get other investors. And most investors are going to try to lowball you. They're going to try to undercut you because if they don't, they're not a good investor to begin with, right?
Plus, you don't have the same level of comps because the apartments don't change over as much as single family.
Now, the other part about single family residential is they're more liquid because I have a bigger pool of people I can sell to. There's the properties that I wanted to get out because of the location. I don't want to be in that location any longer. And when I put it for sale, I can sell to a first-time home buyer. I can sell to another investor. I can sell to someone looking to scale up or scale down in terms of size. I just have a bigger pool of buyers. Therefore, in my live life experience, single family residential has been the most liquid. It's been the most stable in terms of having tenants that last over a longer period of time. The reason a lot of people don't like them is because it's more difficult to scale that way because you're, as my brother Doug Depp likes to say, what do you call them? Single jingles. You're buying single jingles, right? Instead of buying 10 tenants at a time. Now, there are advantages and disadvantages when you look at both. And that's probably a class I should put together because with multifamily, if I have 5 units in there and one person moves out, I still have 4 income streams. With a single family property, if someone moves out, you lose that whole income stream. But the way I approach real estate is every building is its own business and its own bank. So therefore, I'm always saving capital. So if someone moves out, I'm going to have 6 months of rent put up anyway. And my turnover is not going to take 6 months. So boom. And
what you mean? You mean you don't live off your rent like everybody else?
I do not live off my rent. I've never lived off the rent of any property I've ever owned. I go out there and get it myself. And my rents that I get are reinvested back into that business to build that business at a certain point. So, and I do love going into business with the government. So a lot of times I'm in business with the government. So, I'm able to build up, so to that whole side note, but I appreciate the question, Emeka, but it's really a matter of preference in real estate too. But I found my sweet spot to be single family residential properties because I have a crew that I can run through and rehab one. And also from the standpoint of providing a service, it's a little bit different when you're helping a family get a quality home. Something that I'm still working on, and I was having a conversation with my real estate partner yesterday, is I don't think I've still yet figured out the best way to have social impact with real estate, but that's something that I actually think about every day. How to be more of service and provide more to our community in the real estate space in terms of, because we have a huge affordable housing crisis within our city, and I'm pretty sure every big city in America. How do I help attack that? Because
I would challenge that, Jim. I would, not to cut you off, but I know how you think about it. We've talked about it. I know a lot of your rents are under market. Matter of fact, let's just do this. Let's make Wednesday show of real estate talk.
Okay, we can do that. Okay. And by the way, I do got the real estate podcast coming soon, but we can do that on Wednesday as well. But I do have a lot of under market rents and I struggle with that too, right? Because the prices of things are going up. My taxes are going up. My insurance is going up. And I struggle with increasing my rents to match that because, again, not to say this to brag or to boast or anything, but for me at this point, it's not really about the money. I want to see how I can have the bigger social impact. And I think that real estate is one of those vehicles, and maybe I should say this for Wednesday, that allow you to have a bigger social impact, right? I can trade and make money. And cool, I make money for myself, but I'm not going to have the same impact community-wise as I am by providing quality housing, or even if you do something small in terms of like on the retail side to help build community. So we'll save that for Wednesday, but I think it's an excellent question, and you got me to bloviate, so it is what it is. But in the real estate space,
because I think one, you're undercutting yourself a little bit. I don't think doing massive things always is the best thing all the time. Because listen, we all got a part to play in this. So if you got one crib, 2 cribs you're renting out, you're doing, giving a great product, sometimes that's enough.
No, I get what you're saying, but I often think about that, right? So I'm in the process now. For those who don't know, I'm working on my first ground up like development, right? And actually, I have a hearing at the zoning board May 28th for those who want to pull up and say no Roger, no rerun, no rent. But but in doing that, I've been doing a lot of thinking about like how can I even make sure this product is a service to the community. So we hired a Black architect who made sure that our buildings that we're building are fitting in with the aesthetic of the neighborhood, right? We hired a Black attorney to help us navigate us through the whole zoning process and permit process. We're going to hire a Black builder, right? Black appraiser, Black broker, so everything, and that's that standpoint. That's one way to add value to the community. Black. Yeah. So also once we get those buildings in there, like it's just a matter of always thinking about how to add value, because I think there's a difference between being a legit real estate investor and someone who's just purely a speculator, because a speculator just comes in to try to extract value from a community when someone who's invested into the community is trying to add value to a community. And I think it's important for us to think about that, because we talk about the dirty G word, gentrification, all the time. But what some of us are mad at are not that other folks are gentrifying. We want to be the gentrifier, right? So we need to really take a step back and say, okay, I don't want to be a gentrifier. I want to add value. How do I add value?
All right, Joe. I got you.
I'm sorry.
You gotta say that for Wednesday, bro. You gotta say that for Wednesday.
Hey, listen, man, like Minister Farrakhan said, man, you gotta forgive me, man. That's my passion talking, man. That's my passion speaking, man. I'm sorry, y'all.
No, it's real rapping. I agree. I totally agree.
I'm sorry, y'all. But let's get back to it. We talking about stock buybacks. We answering questions in the chat. I apologize, but Kamari that's how it happens, man. It's almost like
I got you. Yeah, Mecca asked the question. I didn't ask.
I know, but you bring up tax to Kamari, he's gonna do the same thing, man. So
that's not true. That's not true. Jimmy likes to lie on me a lot, y'all, but it's okay. That's my brother. I'm mistaken.
I'm lying on him. How am I lying? Hold on. This brother just said I'm lying on him. Hold up.
What, you looking for that?
I'm lying on him.
That's what you looking for?
Am I lying on him? This is
That picture is everything, dog. That picture got everything.
No, it's hilarious. It's hilarious. All right, y'all. But all right, let's get back to the comments though. But thank you for the question, Emeka. And I apologize for everybody watching because I went off on my tangent, but I'm very passionate about that.
All right, so Running Thoughts says thank you for the discussion. Thank you for joining us.
Yeah, thank you. Thank you for pulling up. Appreciate that.
All right. Buffett says Buffett exit plan is a good test case study of potential effects when the baby boomers retire en masse and seek to pull large liquidity out of the markets.
It's funny. I was just reading about that. Where's the book I had? I was literally just reading about the fact that it's called I think it's called Gentelligence. It's a book I was just reading, and it talks about right now we have more different generations in the working place than ever, right? And how are like the different exits going to be? Like we have people from the silent generation who are still in the workforce. And we have people, yes, we really do. In certain industries, there are people that
you got to be like an octogenarian to be working from the silent
generation. No, not if you're born towards the end of the silent generation.
Okay, I'm looking it up.
You might be. What do you think Warren Buffett's part of?
You're correct. He is silent generation. He's 95.
No, but what I'm saying is that the book is really about management. How do you manage? Because the needs and wants of someone who's in their 90s, who there are a lot of 90, believe some of them don't even want to be. They're 90-year-olds that still work, but you also have people that are 18, right? Who were born in, if you're 18, when were you born? Right, we're 2025 now. You know what I'm saying? You were born in like
I have an 18-year-old. He was born in 2006. He'll turn 19 on Christmas.
That's what I'm saying.
Yeah,
like
18-year-old as well. Born in.
You see what I'm saying? So you talk about someone. So in the workplace, you legit in some spaces have people that were born in 2010 and people that were born in the 19 all in the same workplace. It's kind of crazy. So we're in a weird moment in history right now where you have more generations in the workplace than ever before. So that's a great point in terms of what happens when those older generations that control outside of the capital, they control so much power when they start to roll out. What happens then? So
good morning, OCL Sportsman.
OCL, thanks for pulling back up. Makes sense. Have a good friend and prospective investing partner who's stuck in apartment bridge loans, having to refi and put more cash into the deal with the interest rates. Ooh, that's tough. I'm trying to get into the SF. Yeah. But what I would say is, I know people that specialize in different parts of real estate, and I know sometimes people don't like to hear this, but I meet people sometimes and they say, I'm a real estate investor, I'm a developer. And I say, well, what kind? They be like, all of it. And I just take a step back. I understand why they say that, right? Because some people it's really about the numbers in the deal. But I think the real value lies in specializing. And that's not just
and the niches.
Yes, I do. I really do. Anywho, so listen, that is we wanted a great show today. Stock buybacks was the theme of the show, but it leads to a lot of other conversations because the idea of buying back, like Kamari started the show with saying, is really about investing in yourself. And there's so much we can say about investing in yourself. Corey, you got any final thoughts, man? I know you over there, running parlays. We got any final thoughts?
Yeah, for stock buybacks, it's just about the company that's buying back the stock, because some of those companies shouldn't be buying back stock either. Just the same way some shouldn't be giving dividends. So it's all about the company fundamentals and metrics in their position in the marketplace. It's the same as dividends. The analysis is the same. Should they be doing it? That's the analysis. The why. Why are they doing it? Are they doing it to, like you said, enrich the small amount, or are they doing it because it helps to grow all of their shareholders and move them forward in a way that will satisfy the shareholders? There are two reasons why I don't invest in Apple. One, I don't believe in their products, and two, I don't.
Whoa, slander.
It's no slander. It's just my market analysis. I don't believe in their products, and then two, I don't think what they're doing is 50 years, 60 years sustainable. I just don't.
Is any company right now 50, 60 years sustainable for the most part?
Yeah, energy companies will always be around. So
that's interesting. I think we can have a whole show and debate on that, because I think that Apple's been. This may sound controversial, but I think if you look at the numbers, it doesn't. I think that Tim Cook has been a better steward than even Steve Jobs was. I think that
I won't disagree. I'm just saying.
The numbers bear that
they
out.
have good management, and they have built a cult following. But the one thing about cult followings is that over time they dissipate.
no. So Kamari, the numbers will bear that out, right? But a lot of people, because Steve Jobs, like, you know, is almost like in
a god.
Yeah, it's like it's difficult for people to hear that. But
Tim Cook has done an amazing job with like moving Apple forward from where Steve Jobs left it. Because Steve Jobs did a good job, but Tim Cook has done a better job.
And I say
this is not slandering Jobs. This is saying that Tim Cook is actually
I think that's a great point. I think that's the point
actually different, right? That you need different CEOs for different phases of your business.
Agreed.
Jobs was a visionary. He kind of got it popping and got it started. Cook is an operator.
Yeah.
And he was needed to take it to the next level, as Corey just said.
I'm not mad at that. I'm not mad at, but I don't buy companies that I don't believe in their products.
No, listen, listen, it's a matter of your analysis, and I agree. I would disagree, but again, I don't want to belabor this point because it's a whole show about Apple itself, because I feel like now with them, they're getting into different spaces. There's actual government entities that have Apple contracts. They're getting into bigger corporations.
Yeah. And listen,
that right there,
where they diversify to the point where I feel like they are more sustainable.
And when you look at their pie now, you look at their pie now, they're increasing so much of their service business that the hardware business, like, so. And here's the other thing, right? Microsoft and Apple like need each other, right? To the point where if you go back in history and look, when either one of the companies struggled, they will loan each other money because they almost need each other to kind of like exist. So because if we both don't exist,
they're kind of like they're symbiotic. They're like
because if we both don't exist, we're gonna start having fingers pointed at us that we don't want pointed at us, right? As long as you're around, I can point to you, and as long as I'm around, you can point to me, and then the big government will leave us alone.
Always had that Spider-Man meme where we
So it's kind of like they need each other, man.
Absolutely. I mean, Apple's worth $3 trillion. What's Microsoft worth right now?
Like 2.5. Like if they even
they're like right there. They're like neck and neck.
Yeah, but they need each other.
Yeah, they all in the. They all.
You need people like me, so you can point your. No, I'm sorry.
Oh damn! Microsoft's worth 3.2 also.
Here we go.
Yeah,
right there. All right. So Don Johnson's in the building. What up, Don?
Don, what up, though?
Don says Microsoft is low key touching a lot of military weaponry, meaning they're getting a lot of military contracts.
They're already doing the military contracts, but the weaponry is the new thing because they're the weapon systems.
I know, but it's still tied to a contract. That's all.
Yeah.
Because that's where the stable money is. Like Jimmy mentioned earlier, Apple's getting contracts because before the government didn't touch Apple at all.
Yeah, he didn't.
And then now they made a change. Yeah. You know. All right. Running Thought says, I want to see that show regarding forever investments. We can do that.
I like that one. That's a good idea.
What up, Carl Dunbar? Wherever you when I was buying a house. When you buy your next one,
hey, listen, man, holla at me.
Right?
Holla at me whenever you need.
Number love to you, Carl. Appreciate you, brother. All right, Mecca says he's an Android. Android is much better. Oh, slander. Although for PC, Windows have been hot dog water of late. May get a backup back from desktop.
Hey, listen, man, I do both. Who am I to mess position up? You know what I'm saying? Got the, you know what I mean?
Yeah, but we know what he's talking about, Running Thoughts. He's talking about, I mean, Google creates Android. They got their own ecosystem.
Android is an operating system that's open source.
And there's actually more Androids in the world on phones than there are Apple. But we get it.
Yeah, man. So, you know, that's kind of what today was about, buybacks, and there's so much more.
What up, Ed? Apple and Microsoft are like Rock and Unique from Raising Cane's.
Anthony, that is amazing.
All right, but hold on, Anthony. Which one is which? Because Unique is crazy.
Yo,
so is Rock, though. So is Rock.
That's an excellent analogy, though. I love it. That's a culturally appropriate analogy.
All right, everybody. We appreciate you all joining us. We hope you all got something from this. Do us a favor. Go and join the Black Wealth Rebels over at blackwealthrebels.com. We'll be back on Wednesday with our Wealthy Wednesday show. We're going to be talking about real estate. So make sure you subscribe for that. Tune in. Make sure you like, comment, and share as well. We'll see y'all later.